All right. So today's the 25th of October. The main watches for me are probably just going to be some of the popular ones. AMD, which had earnings last night and got absolutely smoked. I think that there's going to be a potential that it might want to fill this gap here on the daily. And I think that there's also going to be some type of margin call type liquidation, selling, and whatnot on the open. So lower the better into the open. We could go either way. A couple people asked me what my plan was, and we still got 20 minutes into the open, and we could be at 1780s, and if it's 1780s and it washes out and unwinds, then I'm long biased. If it is pushing towards 1870, 1880s, and it starts to go parabolic out of the open, then I'm short biased. So it's really about just kind of being a reactive trader off the open for a name like this. And you've got to expect that it's going to have a couple 100 million shares traded today. So it's definitely going to be a great trader, back and forth out of the open, and then after 10, 10:30, 11, it might start to have a nice slow grind one way or another. So right now the SSR is not on because obviously it's pre-market, but just keep that in mind. Once we open, the SSR is going to come on. So that might play into your decision making as far as where and how and when to short. You got to kind of start to go on more of the offensive, kind of be one step ahead when it starts to rally, and you're thinking a short. You might want to be thinking about that a little bit ahead of time, just because once it turns, it turns. So that is that. Tesla, it's been a decent trader. I don't want to get too crazy with it. Nothing would surprise me. If I start in, I'll probably start in a typical quarter or third size. I doubt that I would get too crazily aggressive unless it starts to really either unwind or break out, away from my average. But nothing would surprise me here. So I kind of feel like 315s will be a level to use. If it starts to pull back out of the open and starts to base, I would use probably 315s as a guide. But on that same note, I wouldn't be surprised to see this peak 320s a few times. You can see that it has, kind of been a little bit toppy at 320s. I really wouldn't be surprised to see this thing go 320 and then just fade all the way back down to sub 300. So it did have a pretty big run into earnings, and shorts are probably on the wrong side again, given everything that's happened and given everything where it pulled back, and it looked like it was going to. There was a couple days there that it looked like it was going to go back, sub 250 to 200s or something. But you just have to keep in mind maybe some gap fills. You've got room into the 330s. But again, just like the rest, I think we'll have a decent trade off the open, and then kind of start to think big picture. If you find yourself fighting after 11 a.m., it's probably best just to kind of move along, just because it's a market with such big range that if you don't allow yourself to be wrong, then it's just going to take you for a nice little wild ride. Grub just came on after they reported earnings, and this is 18 a share fade, plus it had another 5 over here that was gapping up. So it's already like $25 a range on this thing. Very easily could go into the low 80s, 78, 80s as kind of a reversal spot potentially, or higher the better. Watch for rebounds, 95s, and fade off. Again, just throwing out numbers, key levels, a whole and half dollar marks. So just like we play 150s to 250s, I'm looking like 95s, 100s, stuff like that. But we'd want to see this out of the gate. As far as where and how far it could unwind, I mean, this is your 80 level here, and then you get into this gap, which would be a little wild. But again, all the air is coming out of these stocks in this market, so just be cautious of size. Something that you might typically trade, 1,000 shares, maybe it's better to trade 200 or 300 shares, something like that. Or if your full size might typically be 1,000 shares on any given day on range like this, maybe your full size is 300-400. That means your starter should only be 100 shares. So just keep that in the back of your mind, just like when we were playing DXC yesterday. Yeah, DXC yesterday, where look, the rebounds were great, a lot of nailed trades, but you had to have a little bit of room. You had to have room to be wrong. And although I just kind of reacted to both washouts and stuff, I can't have a high conviction size type trade on that, because in the event that it doesn't bounce and it just keeps on unwinding, then I'm going to get in trouble. So those are my main watches, and then Twitter. Twitter will be watching. I kind of feel like this could go press 30, 31, 32, 33, and then fade off. So I'd be looking for higher the better, probably join that trend, and then look to reverse on the short side. So again, Tesla, and again, I'm not biased in any direction yet. I'm gonna see what happens off the gate and see how it reacts. But key levels for me, resistance kind of 320 level. If I'm getting short, I'm going to use that as a guide. If I'm getting long, I'm going to use 315s as sort of a level. Twitter, like I said, higher the better. If dips hold, then I'd probably use 30-50s as a guide, and then let it rip 30, 31, 32, 33, and then look for the reverse trade back down. There are times when this thing goes 3 and then it just keeps on going. I think last earnings report, was it this day or yeah, it might have been this day. But it just kept on going, and then ended up coming back. So the key is not to exhaust yourself before the move comes, and just be patient, wait for the trade to come, and see where it goes. And then AMD, like I said, I think that there'll be some type of margin selling, and the main reason I think that is because, this thing was 32, 33, 34, and it just would not dip. There was a lot of it could have been covering up there too, but there was a lot of buying in this area, and then when it came down so hard, and it rebounded, and it was kind of like a no-brainer, dip buy. This is the AMD that was just 34. It's on a fire sale at 22, 23, 24, and it seems like a good idea at the time when you compare it to where it was at the highs, but realistically, you're smoked right here, like in a bad way. So, and it's an easy stock to feel comfortable on margin. So that might be the situation that a lot of people are in. So let that stuff come out, let all those people come out, and then, just look for a higher low type of setup. And if you go back to DXC from yesterday, look for this type of action. If you're new and stuff, you might be hit or miss on this kind of washout, rebound. But if you remember yesterday when I had started to kind of get long, you can see that it based, ramped up, held the higher low, started to grind up, nice little ABCD, and started to ramp. Obviously, we had the news halt PR and all that kind of stuff, but take that out. And, this is the type of setup that it's not a bad thing to, be patient to wait for it to come to you. So other than that, not looking at too much. I'm trying to simplify what I'm looking at because there's so much. The only other thing I saw this morning was Bud. I think we might have a decent opportunity there. But for now, just those main watches for the moment. I'm going to try to stay out of these low float type names and things like that. It's very easy to get biased. They were working last week, they're not working this week, and sometimes it's just better to stay out of them and stay with stuff that has some good volume. So that's about it, guys. Catch you in the room.